All right, so hey, welcome to Forex.Today, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client of ours. We appreciate you. We wish the best for you. We try to provide world-class customer service, provide you with incredibly quick execution speed, certainly better than those big, fat, lazy 800-pound gorillas out there. We try to have very competitive spreads and fees and such so that you can be a success, and we simply want to help you. So here I am, 7:30 in the morning, Monday through Friday here at Forex.Today, to provide you with technical, fundamental analysis skills. Be here, cover things like trader psychology when you're having a grumpy day. This Friday, I'm over at FXStreet.com hosting their most popular webinar, which I've been doing for 12 years, and that's called Trade Non-Farm Payrolls Live, and somewhere between 1,000 and 1,500 people attend that. Very nice. So thank you for being in my life. You're important to me. I care about you, and when I'm grumpy, I want to be here because you make my world of darkness. You're a shining light in my world of darkness when I'm grumpy. So I'm grumpy today, but I'm super happy and super thrilled to be here. All right, and that's true. All right, so what do we got going on today? Maybe we should start with a calendar. Do we need the calendar? Do we need this? Sometimes if I have a failure from time to time, it would be assuming that you already know things and you've already done things, and that's not a good thing to assume, is it? So let's just go through a routine, perhaps a routine that you should have, or perhaps a routine you already have. But we have a week with lots of risk events. So it's not necessarily fundamental analysis, they're news releases and news events. And from that information, you tie that into fundamentals, right? A lot of people confuse news with fundamentals, and that's not quite true. Fundamental analysis would be the analysis of said news. Oh, what did I do? Oh, I know what I did. Okay. Oh, by the way, there's the Whiskey Cigar Fund. Let me show you something. Oh. I haven't even peeled the wrapper off. But it's in the humor. So the recent contributions. Oh, you can't even see a camera. Hang on. The recent contributions, I appreciate. So I'm cranky, so maybe one of these bad boys will lift my spirits this morning. I got a lot of homework to do often, but thank you. This is a Monte Cristo Epic from, you see that? From 2007. So thank you. I appreciate that. Your contributions, I end up buying something a little special, and then I smoke them and I think about how okay, and it keeps me working hard, keeps me focused. And then I say, "Shut up, you kids! I can't spend time with you. I'm doing Forex stuff." They're like, but Daddy, you never play with. Shut up! I'm doing Forex because I got to take care of my TradersWay clients. Get off my grass, you kids. So anyways, thank you. Joseph. Yeah, well, the thing is, there are plenty of children in the world, but how many? You're my precious clients. And the half of them are orphans, Ryan, right? You can pick and choose. No. So anyways, let's go back. La 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 la. La 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 la. All right, ECB stuff this week. Sure. Fine. Okay. Zoom in a little bit. All right. PCE. Ooh. All right. How many people have been studying economic data and reports for years? How many people would say they're pretty good? They know, what GDP is. They know how to read a jobs report. How many people feel like reasonably comfortable? They know what the ISM report is, and if I say ISM, we got ISM services, you'll say, oh, that's different than ISM manufacturing, that kind of stuff. Everybody? Wow. I think my computer just died. What is a flashing red button mean on a Windows machine? Anybody want to buy a computer? Yeah. Hang on. See? I knew it was a bad day. I knew it. Ah, you stupid! All right. Originally $5,000. I'll give you a big deal. #1 price. That was my $5,000 computer dying. All right. All right. Here we go. You ready? Pop quiz. For a small starter, just a small starter of the quiz, there's only 2 questions. One's worth like 1/10 of 1%, and the other is worth the other full Monty, okay? So here's the warm-up question. Which measure of inflation does the Fed use to make their Fed policy decision? Ryan's got it right off the bat. Boom, PCE. Ryan's first at it. Good job. What? Now here we go. Here it is. This is for the other 99.9%. What is the difference between PCE and CPI? It's not a weight. Well, they're both baskets. Okay, so. And yes, CPI does have a different, but that's not the big thing. If you actually review a GDP report that the government puts out, you'll see language. Nah, but see, it uses how would you say it? What's the word? Chain weighted, chained. Trying to think of the exact, but the key word there is chained. Okay, it's more accurate because it uses a moving average of the prices. It's using an average between periods, right? And it is a little more dynamic too. So the classic thing is, let's say oranges are in the basket. Oranges double in price. So CPI goes up. What happens in the real world? Because that's what we're trying to figure it out, right? Okay, oranges are in our CPI basket. Something happens, there's a frost in Florida. The price of oranges double. So CPI would skyrocket. But what happens in the real world? That's right. So you walk in, you're like, I guess we're not eating fruit anymore. Look at the price of oranges. We can't eat fruit. Yeah, they buy apples. But the apples are not in the basket. Right? There's a substitution. We just substitute. We're very good at that. We're like, no, I'll buy this other thing. Unless you're some socialist pig dog country and you're like, there isn't anything else. Kumquats again? All right, well, take one of my coupons. Give me the kumquat. We'll figure out a way to eat this stupid stuff. Kumquat soup, kumquat stew, kumquat pie. I don't know what to do with this thing. But I only have so many coupons. Bag of rice and a bag of kumquats. Great. Thank you, socialist big dog economic system. So, yeah, so we switch. So that's another thing that PCE is a little bit better at doing. It switches the basket more often. But the real thing is the chain amongst multiple months. I mean, it's really complicated math, but just imagine instead of just that the prices are an average price, not price over time, right? So so let's say the price of oranges goes up for a few months and then comes down, and PCE would be better at looking at that instead of saying, here's oranges once, here's oranges twice, and it's way up there. So it is. Whatever. So all of this is important because it goes to GDP. Okay. But if you look at, like I said before, download a GDP report. I mean, the actual spreadsheet. You will find it'll talk about things that are chained. And you're like, whoa, what is that? And that would be from PCE. And the chain meaning tied together like an average. So, you know, what's a 5 EMA? You take 5 data points, average them out. And think of it that way. So instead of data point, which would be more volatile, you know, whatever. So consumption is important because in the United States of America, 70% of the economy is consumption. So looking at personal consumption expenditures versus something like CapEx, this would be very, very important. Spending is part, you know, that's part of consumption. La-di-da-di-da. So that's important, and it leads to GDP is what I'm trying to lead to. Okay. Kiwi news, fine, good. Right? Hopefully moves our Kiwi. Yin, 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 yin. Fine. Aussie. But all of this is moderate, but still, look at Asia session, right? Asian session. So if you live in Asia, you're not allowed to sleep in that day. So that's tonight for me. Tuesday, European GDP. It's going to surprise on the upside. Europe's doing a lot better than anybody expected. But remember, I think that has to do with the U.S. economy. So, oh, Brady, did you ask a question? No, I must have missed it. So I think all of this is going to surprise to the upside. Better than expected GDP, better than expected sentiment, better than expected everything. Case-Shiller, I don't think it'll be, we know the trend, everything is high right now. And then tomorrow, inflation reports out of Australia, manufacturing data out of China. This is another Asian session which you would treat, which you would trade. Oh yeah. So like the next Asian session, which for me is tonight, it's like it's tradable for sure. I like the Asian session. A lot of people don't like it. I'm like, well, you just maybe don't trade it properly. Tomorrow's Asian session is definitely good. Okay, inflation report out of the RBA, manufacturing data out of China. What more do you want, right? I mean, that's a market mover. This can move all commodity currencies. So the Brazilian real, for example, don't call it real. Don't even say real. The real. Yes, anything commodity related can move on that. In particular, to Australia, iron ore and coal demand and such. I mean, if manufacturing data is good, you could surmise increase in demand for iron ore and coal, copper maybe. Okay, so pay attention to that. Exactly right. Well, yeah. Yeah, and especially like RBA, we're less clear what they're going to do, right? Some of these, like we have a pretty good idea what Draghi's doing. We have a pretty good idea what Yellen's doing, although we're going to face this new thing. So the meeting this week with Yellen is her last one. So how's it gonna what's the future going to be like at the Fed? Well, that's not that clear. It's debatable. We don't know. So that's a bit of a risk. Well, what the RBA is, I mean, I'd like some more data, and so we have more data coming for sure. So that's good. Okay. Again, I think we're going to surprise to the upside out of all European data. Zoos surveys are going to be better. Unemployment, but isn't what did we look at yet? It was last week. Was it Spain that had like 16% unemployment still? Like, what? But then again, socialism kicks in, and you're like, well, they'll have 9 years of unemployment benefits. So, like, if you still have 6 years of unemployment benefits, you're like, why not just stay home and play soccer on your PlayStation? Right? And then if you get sick, you just go to the hospital. Government takes care of it. Let me give you an example. Being being a self-employed foreign exchange trader with diabetes, you could spend thousands of dollars per month on something like insulin. Like, what? And that's with insurance. What? Why? Because diabetes is so rare. 50% of the country has diabetes, and you're like, whoa. hey man, your insulin, that's going to be a type 3 level medication that's not covered. You're going to have to pay deductibles and you're going to have to pay all this kind of stuff, right? So pulling up to the window in January at the pharmacy, you're like, give me my insulin. They're like, all right, give me $2,000. Right? Welcome to America. With regular health insurance from a regular employer, not self-employed, but like if I worked at, I don't know, a bank, it'd be $12. Welcome to America. But, you know, so it's funny how all these things influence your decisions and behaviors, right? So we're talking about behavioral economics and stuff. Well, what about the situation where it's all paid for anyways, and you're unemployed and you're just laying around? Hang on, I think the dude came here too earlier. Well, I'm not going to answer that. All right, so anyways, blah, 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 blah. Can you imagine though? It's true. That's the system we have in the United States. You're a foreign exchange trader and you're self-employed? Oh, righty then. But you're a foreign exchange trader at a bank? Yeah, $12, take your insulin, you need it, it's not a problem. It's amazing. What a strange system for, you know, one of the most advanced countries in the world. So ADP, obviously on Wednesday, some home sales, interest rate decision, nice. When was the last time you saw ADP and FOMC on the same day? It doesn't happen that often. Okay. Yada, yada, yada. ISM manufacturing, we're more interested in ISM services because of the consumption part. Well, no, that wouldn't make sense. It's a service-related industry. It's not a manufacturing-related industry like it used to be. Back in the financial crisis, we were paying close attention to ISM manufacturing data because we wanted to see when the average Joe got all this, you know, $3 trillion in spending, when that finally trickled down to the average Joe. Again, we're not that focused on that anymore. We're more interested in ISM services. And it won't let me move this. Oh, because I haven't zoomed. Maybe it's this thing. There we go. Zoom back in. And Friday, non-farm payrolls. So we don't have CAD and we don't have ISM services. Is that right? We don't have Canadian jobs or US ISM services at 10? Yeah. It is right, huh? What about, yeah, all right. So one of the things I'm learning in macroeconomics, by the way, super freaking complicated. Oh my God. You know what I was thinking, Ryan, since you've thrown yourself into studying economics, I think what I'll do is I'll send you a recording of like my first class. They're like, there's a gap between this and that. You're like, I totally understand it. And they're like, oh, okay. And then all of a sudden they start doing the math, and all of a sudden you're like, oh my God, oh my God. This is the first class. I got 16 weeks of this, 3 classes a week for 16 weeks. And I'm like, oh my God. He's filling his board with calculus. You know, oh, so you just do this and do that, and you go over there. This is a function of that. And he says, so you can see it's right. It's a negative. It's a negative derivative of alpha. It's a negative derivative of the alpha. I'm like, what the hell are you talking about? Oh, he's so right. It is a negative derivative of the alpha. It was right there in front of me the whole time. I'm like, what the hell is the negative derivative of the alpha? Gee whiz, and I know what I'm talking about, right? Like, I know macroeconomics. On the first day, this guy just destroys my ego. Just destroys me, wipes me all over the floor. I'm just like, oh, that negative derivative of alpha. What the hell is this guy talking about again? Oh, the long run, the gap between long run output and short run GDP. Oh, okay, but the negative derivative of the alpha. I wish I took a screenshot of one thing, but it got way even worse. I don't know if I haven't had this. Give me a second. I'm like, what the? All right. So first day of class, and you're doing stuff like this, and this is macroeconomics, right? The Cobb-Douglas function here, the NPL times L equals the DF or the DL over L. So there you go. Obviously, the 1 minus the alpha is the AK over the negative of alpha times the L with the negative of the alpha, and then you're going blah, 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 blah. So obviously, NPL times L over Y is equal to 1 minus the derivative of alpha. So, you know, the output is obviously constant. I'm like, what the? Conclusion? Oh, yeah, well, the problem is I asked for this class, right? So, anyways, I'm learning macroeconomics from a Fed dude. And he speaks so fast, he's like, blah, 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 see? You know, like, wow. Wow. And this is like my first hour of 36 hours of classes, right? I'm like, wow. So, anyways, a little bit of calculus to start the day. So, yeah. So no CAD jobs either, huh? Just 2 early, I guess. Oh, I know what I was going to say. So, you know, he was breaking things down like, because he works at the Fed, and he's like, well, you know, when we do the establishment survey, which luckily I already know what that is, and that it's different from the household survey. But he's talking about how many households are surveyed, what day of the month is surveyed, you know, which is really good. So, like, I know a lot about non-farm payrolls, right? So, again, one of the, if not the first class, the second class, we're breaking down, like, the details of individual, you know, reports on NFP and what days these are being calculated on. And so I knew a lot of this stuff, but, like, did I know it happened on the 14th when they called 75,000 different households? No, but I knew they called households, and I knew the type of question, and I knew the difference between the establishment survey and the household survey. So, right, so all that kind of stuff, but breaking it down to the day and stuff. But then if he throws the calculus at me, I'm like, dude, I know a lot about non-farm payrolls. But you start throwing the calculus at me, how they use the fuzzy logic to create the non-farm payroll headline number. Imagine that, right? You call 75,000 households and 75,000 businesses, and you come up with the number for the entire country? Prove it with math. I'm like, whoa. So I hope he doesn't go there, but I feel like he's going to. But if he does, Telling you, I'll do non-farm payrolls one day. I'm like, hey, let's do the calculus. Let's do our own calculations. But I don't want to do the calculus. So anyways, so we got news coming up. It's a big week, right? Consumption data, interest rate decisions, all that kind of stuff. Alrighty, so let's start our day. Starting the top left, I suppose. So we drew a little thing last week. I thought it was early last week. Is this a 4-hour or a daily? This is a 4-hour. This is Pig Dog. And hey, it's heading down finally. Isn't that nice? Your name here. Nice. Does it work? Yeah, it works. How funny, huh? Your name here. All right, I didn't mean to do that. At least maybe I can get rid of it. It's funny how they give you the RPG. Why wouldn't they just say select a color? Oh my God. What happens if I do that? Yeah, all right, whatever. So anyways, it's coming down, huh? Look at this, down, 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 up, lower high, right, down to the 55. Then I would expect on a smaller level, like maybe an hour, you get like a three-wave correction and then a move down, okay? Okay. What's the target if that holds true? The target is there. So just imagine this coming down to the 55. Three wave on a smaller time frame than that. Okay, that's what a bear would be thinking. But that's what we were thinking last week. When we were talking about how dangerous it is to sell into the uptrend. You want more than a guess or an idea, right? Now, if you are a bull, you still see this and you're under threat, but you're thinking probably more like a double top, or just beyond if you're silly, right? If you're gullible. Okay, but either way, you would expect some sort of rise, even if you're a bear, or at least you should. Okay. You guys see the bond market today? 10-year T-note hit 2.7. Wow. Yeah, I was really happy about that. If you remember when we hit 2.0 more recently, like in the last 12 months, it went up to like 2.4, and then at some point it dropped all the way back down to 2.0, and I said, this is probably where you should leverage up. And I actually did. I went out and leveraged up and borrowed or bought or whatever you want to call it, took on a bunch of money cheap. Said that was it. You'll never see in your lifetime money this cheap again. And sure enough, it went from 2.0 to 2.7 on the way to 3.0. And think of it, the cost of borrowing money, essentially, I'd say within 6 months will be 50% more expensive than a year ago. It's amazing if you think about it that way. The cost of money will have gone up 50%. So I'm very, very happy with that. I made the right decision for my family. Always feels good. Taking a look at euro dollar, different than the pound dollar, huh? Now you got the down, 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 the up, up. That's all good. Friday was in the kill zone. That's fine. Okay. So Friday, I debated. So let me show some transparency here. On Friday, I think it was all of them, wasn't it? Yeah. On Friday, many of these were in a sell zone. So let's go back to this one. An assumptionary sell zone. But I didn't want to do it because I don't like selling in an uptrend or buying in a downtrend. So I could see it, but it seems too aggressive to me. And what I'm talking about is something like simply like doing on Friday. This was a sell based on the lower high idea, and we had talked about it, right? So, but I mean, think of it. It's the end of the week. It's essentially the end of the month. You know, the last Friday of the month, and all this kind of stuff, and I just didn't want to do it. And I don't want to sell an uptrend, and maybe that's a weakness of mine. But where I think it's going to come down, but I don't sell it. But I think really what it is over the blood, sweat, and tears for years. I have scar tissue that prevents that behavior. Because I would say, at best, as many times as I get this right, I probably would get it wrong. You know? So it was funny, and I really did. I was on my phone, and then I went to my laptop, and I'm like, I almost sold this, almost sold pound, almost did. I looked at like 5 things, and they all told me the same thing. And I didn't do it. I just didn't want to do it. So there you go. So buying dollar was the thing I passed on. Okay. But look at this. Strong dollar brings oil down. Look how beautiful that is here. This is all dollar stuff. Double top at the right pivot. It's beautiful, beautiful setups. Passed on them. Okay. USD Mexican peso. We know that's going up, and then we're going to sell that like at the end of the week, right? Well, it's coming up off that area. That's just fine and dandy. Didn't do it. Didn't want it. The pig, the euro. It's all there. I just couldn't bring myself to do it. So let's look at yens. So that's me maybe being overly cautious. Ryan had brought up something last week, and I'm like, well, maybe you're being overly cautious, right? So this is me telling myself as well, coaching myself. But I don't know if selling into an uptrend is cautiousness. Maybe that's the kind of cautiousness was, prudent versus, I don't remember what your cautiousness was. Probably profit zones or something, right? Pivot profit zones, trading through them. All right. It's more like I feel more comfortable selling low or buying high in a market that is blown through its logical targets, kind of like a moo trade, right? I'd rather be aggressively bullish in an uptrend or aggressively bearish in a downtrend than selling an uptrend or buying a downtrend. So it was kind of, might have been, so anyways. Okay. So now making these lower lows, now kicking up the pivot zones. This is good stuff, isn't it? This was one of the more bullish pairs. Right? Remember, this is the drop we talked about a year in advance, 6 months in advance, 9 months in advance. Here's the false rally we talked about 3, 6, 9 months in advance. And then, is this the drop into the April 1st repatriation trade? It's kind of interesting. Maybe. Right? Pound. Pound is really elevated, but look at these. Like, don't get so caught up in what it did in the last 15 minutes or the last hour or something. What have you learned as a conservative, disciplined trader that makes opinions based on analysis? Forget about your 5A cross. Forget about your Stokes cross. Forget about your MACD cross, your ADX cross, even moving average crosses. What's like the big picture stuff? The big picture stuff is that's the target for the month of January, and that's that. What do you do in this situation? Remember some of the other pairs even blew through these, remember? On the weeklies, and I'm like, I don't know what to do at R4. I just don't, right? Because it doesn't happen. This is the kind of stuff that happens over and over and over and over and over again. So how should you behave? Well, every once in a while, you'll blow through your pivots when something unusual is happening. But I think that's the information to say, wow, something unusual is happening. Maybe I should behave differently or do some sort of research and stuff. But most of the time, it behaves as you would expect, right? So here's pound yen. It hits the target for the month of January and stops, right? Thank you, Ryan. So I think this is the stuff that makes you a good trader or a bad trader. This. And you knew it 21 days earlier. And that you changed your behavior in here. Maybe not sold, but if you were long, you took profit and you're like, well, I don't know what's going to happen here, but I'm going to wash my hands for dinner. I'm all done. Give me my money. It might drop, it might skyrocket, doesn't matter. I made my money. Done. Right? Does that make sense? And the rest is just stuff. Your ADX, your Stokes, your MACD, your RSI, all that kind of stuff. But to say, well, I don't know if it's going to reverse, but if it's going to reverse, it would reverse there, wouldn't it? Right? You're like, well, I don't know if it's going to reverse, but if it's going to reverse, it would reverse up in there. And you have these like pre-established assumptions. Sometimes they're wrong, but often, if not a lot or most of the time, they're pretty accurate. And I think that kind of attitude on the long run is what keeps you alive. Remember, I think the secret to Forex, two things. Staying alive, trading every day, every day, every day, every day, right? Never putting yourself in a situation where your Forex trading career could be over, right? Just survival makes you wealthy. And the second thing is, right, assets under management. Being conservative, being disciplined, being humble is the first thing. Because then the next thing is, well, you can't make a lot of money if you're conservative, disciplined, and humble. You know, because your reward is a function of risk. Calculus! Yeah, right? Reward is a function of risk. So if you want a lot of reward, you have to take a lot of risk, but then risk is bad, right? So failure is probably a function of reward, and reward is a function of risk, and risk is a function of failure, and you get this horrible cycle. So what you want to do is keep your risk low, but then you give up money, right? You're like, well, I want to make a lot of money too. I like being a currency trader, but I'd like to make a lot of money. Well, cool. Then you need to trade a lot of money. You have to have a lot of money under management in your account. You're still trading a small percentage, so you increase the AUM, the assets under management. And all of a sudden you're like, wow, trading $20 million is so much better than trading $20,000. I take the same trades, I make the same decisions, I'm using very, 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 very small lot sizes, right? I'm only trading 10 full lots at a time. But the cool thing is, instead of making, $600 a month, you make $60,000 a month. Oh, great. But it's the same trade, same risk relative to the account, right? So whatever. So I look at just stuff like that, and you're just like, well, I don't know what the market's going to do, all this kind of stuff. It seems like it's really bullish, great, amazing. But if it's going to stop going up or even start to fall, it would do up here. That's what my analysis would tell me. And then you make your decisions, like get out or sell. So, right? So you don't know what's going to happen, but you know the prices, right? You'll know your behavior, and you know the prices in which you may behave. And that, I think, is what makes you a good trader. So there's that. That's coming down. Let's do a 4-hour here. Right? Here's the big drop. Here's the false rally. It's not an amazing drop. It's been a few weeks now, and it's still not rallying like it did before. So I'm kind of happy where we are. Okay. Kind of happy where we are. Look, CAD yen didn't even get the false rally. Okay. So last week, so 2 weeks ago or 3 weeks ago, I sold off the Turkish lira and did very well, as you know. USD Turkish lira, we sold sort of up here, and it came all the way down, and great, right? Made a lot of money. Great, fine, good, nice. What did I trade last week? That was 2 weeks ago, whatever. What did I trade last week? I didn't trade lira. Trade ZAR. Thank you. So I shorted. I gotta zoom in now. What did I sell? I must have sold this. Anyways, I don't remember. What are these dailies? What are this? Are these weeklies? Let me change this because this doesn't look like what I had in my mind. Let's try monthly. No. Let's try weekly. Huh. That's interesting. I wonder if I had different pivots on this. I don't know. Well, I don't know what I'm thinking, but I know what happened. For some reason, I thought this green zone was lower, so it's just not lining up for me. But long story short, we sold this somewhere. I think even the week before. I think it was on it for 2 weeks, wasn't I? I might have been on it 2 weeks. That might have been the other thing. Maybe it wasn't just 1 week. But anyways, made a $1,000. I got knocked out plus 600 on one and plus 400 on the other. So I don't have any positions open. So that's that. But I got out here, so I jammed my stops in here, and you see them out now. Sold. That might have been one. I sold here. Yeah, okay, that makes way more sense. Thank you, Juan. That's right. I can see this like, yeah, that's sick. That's so awesome. All right, yeah, okay. So I would have sold here, and then I think I sold again here, and I jammed my stops here. I think it was on Friday. Remember, one had 20,000 pips, and the other had like 19,000 pips or something. I was laughing. Um, yeah. So, anyways, I only made 38,000 pips, but it took like a whole week to make 38,000 pips. um, but anyways, 1,000 US bucks, whatever. Boom, there it is. So I'm not in that anymore, and it's now making higher highs. But isn't that when you're supposed to get out? And that's why you jam your stops that way. So if I was a cheeky monkey and I wanted to reshort this, I will change colors here. Okay. You would look at this, wouldn't you? Okay. You can see that that's what I did here. You can see that that's what I did here. Okay. It's just like, to me, this feels like this. Does that make sense? Pipper says you left click and hold it. What? Left click and what? If you left click and hold drag to chart from account news trade visit. Oh, you kidding me, really? I'll play with that. So here's one that got killed today. Left click and drag that. Oh, snap. That's sick. I want that fatter. I want that fat. I want to see that. Give me the. No kidding. I guess this, well, let's go up that and probably does it. You should do this. Some custom color. We'll do red for now, that's fine. I'll do crimson. Yeah, crimson. Boom! So I sold there and I took profit there. See, just like I said. Nice. See? Yeah. The Pied Piper. Oh! That was the second trade. That's correct. The first one I shorted up higher, up here, and I got knocked out here. So, like I said, the first one I made 600, and the other one I made 400, $1,000, whatever. All right, so that's cool, right? I mean, that's where, right? Where was my stop? My stop was right there. Makes sense, doesn't it? What was my entry like? Do you like my entry? Was that a good entry? Top of the range? Like a boss. That's right. Like Mr. Sir. He smokes cigars because he's the boss. He goes, there's something that Brian probably doesn't know. He doesn't know that one. Mr. Sir, he smokes cigars because he's the boss of the lumber mill. No? Does anybody know what I'm talking about? Oh, yeah. Okay, Mickey. Yeah, sure. The procedure's easy. No. Yeah, Mr. Sir. He's the boss of the lumber mill. Stinky Smells or something, I think it's called. All right. I suppose, yeah, whatever. All right, you guys will have to start Googling. All right, so a quick lesson on the basics. And this would be straight up basics of trading using price action. Well, first of all, let's undo this. Undo. Click, undo, turn off. Okay. Can we agree that this is a downtrend? You just did 90% of the work. Right? Remember, I tell you all the time, over and over and over again, just have a bias. After that, everything's easy. And people fight me on this. They fight me. I don't know why. That's a downtrend. Great. 90% of your job is done. This goes back to a conversation Ryan and I had in Johannesburg, and he's like, yeah, well, 80% of it is showing up. I'm like, no. 80% of it is not sucking. Right? Because there's two problems in the world. A, 80% of people don't show up. And then B, 80% of the people that do show up suck. So if you want to be, right? So you want to be the guy that shows up and doesn't suck. Then the world is your oyster, right? So anyways, let's say 80% now of trading is that you've made a decision. That's a downtrend. Great. But now you know not to buy, right? Now you know something. You know all the places in which you will not buy. So now all you have to do, so now like the decision-making process is twice as easy because it's half as much work. So now you only have to say, well, if I were to sell this, what prices would I sell? And for that, you have a plethora, a cornucopia. How about this one? Do you know what a plethora is? No, sir. Right? You know this one? He has a birthday party. You have many birthday presents in your... Oh, would you say I have a plethora of birthday presents? Definitely, sir. Definitely a plethora of birthday presents. Do you know what a plethora is? No. Nobody knows this one? It's another man movie. It's another man movie. The Three Amigos. Come on, these are classics. Classics, right? Yeah, shopkeeper, I need a plethora and a cornucopia. Yeah. Anyways, yeah, Three Amigos. Gee whiz. Some of the greatest mad movies ever made. Anyways, so now it's like, now you just want to decide at what price would you consider selling. And that's what technical analysis is, right? So you're like, wow, look, you're a rocket surgeon. This thing's falling. It's a downtrend. Great, amazing stuff, right? And what's the next step? You sell lower highs. Now you can use pivot points. You can use oscillators. All these things are fantastic. So like when I teach people how to trade oscillators, we look at stuff like this and like, no brainer, not a problem. In fact, you sell on the entry into the sell zone, right? That's straight up out of the training course. Boom. Very easy stuff. In fact, it's based on the entry here. So I'd have to adjust this a little bit. And it's actually, that's the sell. But what we're talking about here, the easy, you know, kindergarten stuff is the, let me change this. That should be color. Let's make this an arrow. Okay. I mean, all of that really. And this could be a higher time frame if you want it. All right. So what is it that I'm doing? Those are all trade opportunities. Okay. Okay. Let's start up high. This is the old support. Becomes resistance. This is where you sell. Here's the old support. It becomes resistance. This is where you sell. This is the old support. This becomes resistance. This is where you sell. This is the old support. It becomes resistance. This is where you sell. This is the old support. This becomes resistance. That's where you sell. This is the old support. This becomes resistance. This is where you sell. If you're a bear. Those are all trades. So when I was showing you this pair, again, I'm trying to get you to think macroeconomics. I'm trying to get you to think about central banking policy, all these different things, and how do you put this into a trade. And I'm trying to find currency pairs that you're not watching so that I can bring something fresh and new. But this whole idea is like I sold here and I sold here, right? Those are the two places. Well, of course. Like, where else would you sell? Is there any other scenario that would look like a good sell? And that's what I'm trying to get you to do. Sort of malice aforethought, if you will. You trade with intent in the first degree. You plan all this out. You're like, this is a downtrend. I'm going to find resistance and I'm going to sell. And once you've made that decision, the other stuff is like easy, I think. So you could say, well, Wayne, is it the moving averages? Yeah. Wayne, is it the pivot points? Yeah, I guess so. Yeah, that works. Is it the oscillator? Well, yeah. Yeah, I mean, you could definitely use that. It's going to help you, right? Sure. Okay, fine. Or this 5A cross or that 5A cross. Yeah, fine. But isn't like the most important thing is all I did was sell at resistance in a downtrend? I mean, isn't that 80, if not 90% of the gig? This is why I didn't behave the other way. Like, I really, really thought pound dollar and euro dollar would fall. I really thought USD CAD was going to rise on Friday. It was near the close. I'm looking at it. I could short this. This is a perfect. This is a lower high. I could see this coming down. It's end of the month. Trump's going to talk State of the Union on Tuesday, which we didn't bring up yet. What's he going to do? So, you know, I could see this. I could see this coming down and then popping back up, actually. But anyways, I could see it, but I'm like, that's not what I do. Right? I can't walk down the street and tell people, and they're like, hey, so what do you do for a living? Oh, well, I short rallies. I mean, in fact, it's the thing I don't do. It defines something about me. I'm like, I can predict these things are coming down, and it has a high propensity to come down in situations like this, but I'm going to ignore it because that is the type of trader I am. Or in this case, when I do find a downtrend, I sell at resistance. Now, the other thing over time will happen, and I wrote a magazine article about this, I don't know, 2007, I'm guessing. It's funny, I remember I could tell you what I was doing, smoking a cigar. I was sitting in my backyard in a shaded area underneath a weeping willow. Fantastic little area. And there's a little fire pit over there, kidney-shaped stone area that I had. And I'm like, what's the difference between a good trader and a great trader? And that's what the magazine article was about. And it comes down to situations like this, like, do I short again here? And I'm less aggressive here because we've broken this high. And a good trader does this, you know, down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, right? Up, sell, down, 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 up, sell, and they lose. And they try it again, and then they lose again. So a good trader will make five trades. Let's say 5 trades in a row are winning, and then they'll have 2 trades in a row that are losses out of 7. Right? They have 5 winners and 2 losers. I'm going to make this a 2, right? But the problem is the 2 losers ends up being 40% of the profits, right? You see where I'm going here? And over the long run, right? And now we're talking macroeconomics, if you will, right? If pips are your product or your output, you have short run and you have long run production. So on the long run, which would be this, I have found that in this situation, I chill out. Now, it's almost similar to this, but it's not quite. It seems like we made a clear breach, and that there is an increase now, especially with the S pivot, that it could do this. And I think a great trader, and I'm always trying to be great, doesn't mean I am, it means I always try, which this is difficult to change, right? This is the discipline, I suppose. And everybody thinks discipline's about losing trades, right? Getting out of a losing trade. No, why are you in a losing trade? So when you're professional, it's like, when do you skip a trade? When do you let your profits run? And when do you not let your profits run? When do you just get out anyways, right? All this kind of stuff. And here's the interesting thing. A great trader would only make those first 5 trades, get down here, and then maybe just be done for a while. The other trader sits around for 2 or 3 more days and then gives back 40% of the profits. So they work longer and they only have 60% of as much money. Meanwhile, the great trader has 100% of the money and took Friday and Monday off, and maybe even Tuesday. With the weekend, that's like a 5-day weekend. We're like, where's Wayne, right? Imagine we're in a trading floor together at a hedge fund. Like, where's Wayne? He's been gone. I haven't seen him since Thursday night. Where is this dude? Oh, he took his family to the beach. You're like, what do you mean he took his family to the beach? He's missed Friday. He's missing Monday. This guy's crazy. What's going on? And then the guys on the office lose 3 or 4 trades. And they're like, oh, right? But there's something to it. And imagine, I wrote this 7 years ago. The great traders, not the good traders that know technical and fundamental analysis, the great traders that you know when to walk away sort of thing. It's like you milked this trend to a very logical point, and in particular to me, right? I mean, you can see the consolidation, but it consolidated here and it consolidated here. But the big thing is we're not supposed to be up here. Doesn't mean it won't fall, but I think I need to chill out now on this, because I think maybe 50-50, it has the same potential to do that. So I just walk. Take my $1,000, boom, done. Thank you, South Africa, right? And we'll wait and see. So that the great trader makes 40% more money, works 30% less than a good trader that knows how to trade. Cool, right? I hope that puts a little bug somewhere, and in 5, 6, 7 years from now, that'll be the thing you're working on. Not making money. I mean, you're a currency trader. I mean, again, that is your job. It shouldn't be a surprise, right? But the thing is, how do you get to that next step? Yeah. So anyways, look, so somebody asked about the price action. So yeah, I took very, very easy, straightforward, boring trades. They're boring, right? Remember, if you got drama in your life as a currency trader, you're messing it up big time. If you're ever like, please fall, yeah, you're in trouble. And I don't know if your Forex gods are the same as my Forex gods, but it never falls. Oh, wait. There's this one scenario. Right? You're losing 100 pips or something, and you're way over leveraged, and you're like, please come back, please come back. I will be so much better in the future. I'll make so much I will never put myself in this situation, right? Again, and it's coming back down, and you're like, thank you. Now you're only minus 20, minus 10 pips. You're like, oh, please, I'm almost at break even. You were minus 100, now you're only minus 10 and minus 12. Then it's minus 8. You're like, oh, you're waiting. You even got your finger on the trigger to get back to break even. And then it's minus 12. We're like, oh, well, we'll come back to minus 8. And then it's minus 15 and minus 20, minus 25, minus 30. And you're like, oh, please, well, it's going to go. You watch it go all the way back to minus 100 again. And the Forex gods, all they've done is like, I'm going to get you almost to break even, right? I get some ice cream. I get some ice cream, and you don't have none. You want a lick? Psych! I get some ice cream. Yeah, that's Eddie Murphy. Raw. Come on. Yes, you gotta get in the man movies from the 80s. So anyways, I feel better. I feel better. I was really cranky an hour ago, and you made my day. Yes, great. Well, thank you very much, guys. I appreciate you. Honestly, I went from a super bad mood to a super awesome mood. Feel like kicking some ass. Let's go kick some ass. Make some pips. But we got a lot going on. Like I said, we got a moderate Asia today, an awesome Asia tomorrow. But remember, during that awesome Asia tomorrow, Trump is going to be speaking. That could be interesting right during the RBA announcement. And then we got FOMC on Wednesday, non-farm payrolls on Friday. Holy schnicker-schnocker. What a great day to be alive. So again, thank you for being on my team. Thank you for your loyalty and respect. Thank you for the cigars you buy me. That's nice. Thank you for being a client of TradersWay. We appreciate you. Yeah, I'm going to hire a calculus tutor so I can know what the derivative of a negative alpha is. I think I've met people. I think I've met people at Forex conferences that do have negative derivatives of alpha. I'm like, look at this guy. Look at this guy. He's got a negative derivative of alpha if I've ever met one. Right, so cool. I'll see you tomorrow. It should be very interesting, as some people will say. Thank you. I got lots to do today. Got to roll, yo. Please put it on YouTube. I will definitely put it on YouTube now. But you have to promise me if I put it on YouTube, you'll like. So like, let's say 400 people will watch it and like 3 people will like it. And I'm like, that sucks. Yeah, well, thank you, Ron. Yeah, Ron always thumbs up. Ron buys me cigars. Ron's my best friend. Thank you, Ron. Boom. Yeah. Time to watch some 80s movies, huh? All right, see you guys tomorrow.